Now, you came into 2021 maintaining Xingtai's preference for high growth with a value overlay, and you maintain that conviction with your Sohn pick, which is a Chinese golf wear maker listed in Shenzhen. Now, the name itself, Biem.l.fdlkk, that tells you a lot about the target market for the company. That is the local high-end consumer. You're saying that it enjoys a moat for now, but is there an increasing risk that we may see competition on home turf?
Good morning, Sophie. So currently, they are the market leader in this niche sector, and they're the only listed golfwear brand. Their customers actually see them more like a lifestyle brand, a high-end apparel brand that's, customers think is suited to this new lifestyle that their Gen X, over 40-year-old Chinese consumer is now very focused on. So the brand signifies, more leisure time, a healthier lifestyle, more sports. And the price points are high. They're actually higher than Polo Ralph Lauren and more in line with Armani. We think that because the brand is very local and really knows how to target that local customer, give that local customer the right fit for that body type and shape, gives a lot of attention and services to that VIP customer. Because of all those reasons, they really have built a very strong competitive moat. And they've built a large footprint. They have 900 stores across China. And we believe that the company is at an inflection point to higher growth. We believe that in 3 years' time, we should see a higher, we think the growth is going to accelerate from here as they consolidate.
And with accelerating
their market
growth, that could mean that shares could see more upside. We have shares trading around 21 yuan for now, off the record that we hit in May, but you're also seeing the base case of a doubling in the share price in 3 years, tracking revenue growth. What are the risks, though, to this upside?
Well, the obviously risk would be that their target growth plan would not roll out as they had forecasted. We think the apparel sector is actually a very interesting sector to look at today. And this stock in particular has a very niche positioning. So there are clearly risks that, for example, COVID delays their rollout plan, or this consumer, is not as strong as that we predict. But overall, we would say that the apparel sector is ripe for consolidation. New entrants will find it hard to enter, and current players will be able to consolidate market share and see higher growth from here. And in particular, this brand is very unique and positioned in a way that has no domestic competitors, and the foreign competitors are not coming close to being able to offer what they offer to the local consumer.
Now, in order to reach your bull case for 70 yuan and seeing the company command a PE of 25 times, what else needs to be done? Where else must it see success?
Well, it needs to maintain its operating margins. It needs to be able to track all the growth targets that it has in place. And it needs to be able to really maintain the operating margins by controlling costs. So there's a number of factors in play. But because the stock is really valued below the sector average at 16 times, there is a margin of safety. And so we do believe that our base case should be achievable, the 100% target share price growth in 3 years. The bull case will depend on other factors that they have in place, and we believe it's achievable, but there's some risks in place for the bull case.
Now, margins are key. The company's sitting on a comfortable cash pile. As you noted, they're looking to add 300 stores annually over the next 3 years, indicating just how important the offline channels are for the company. But we have seen the online strategy being beefed up in light of the pandemic. So we've seen efforts like WeChat campaigns that have delivered higher conversion rates. Are you seeing more of a tilt towards embracing a digital strategy at the company?
Yes, any successful brand has to do both online and offline now. And we believe the company is focused on being able to execute a better online strategy for the brand. They've been very good at building a very strong loyalty program. They have about 70,000 members, and they offer these members a lot of very tailored services, like being at special events where the members can hang out with KOLs, key opinion leaders, and stylists, and they feel like they're getting special attention. And that is like they're joining a club in many ways. And that is a very smart way to build that loyal customer And we believe that loyal customer base is going to grow over time. But certainly they can use a lot of online strategies to tap into that loyal customer group and to grow that base.
And Michelle, for customers outside of the golf club, you have a brand, Carnaval de Venise, which was established by the company. Could we see more attempts to capture a wider market by Biem.l.fdlkk?
That's what's so interesting. I think Biem.l.fdlkk has really built a lifestyle brand, and they're focused mainly on the core brand until now. But as you point out, they have another brand that they will be rolling out. So there's lots of optionality here to build on the core brand and to do brand extensions. We've seen that in multiple cases with other sportswear, other apparel brands in China, where the multi-brand model has really been successful. So this is still early stage with their secondary brand, but we believe that both with the build out of the core brand and the attempt to expand that offering, the growth should be pretty interesting from here.
Michelle, I just want to get your thoughts on the brand patriotism that we have seen in China. Now, last month, we saw a share sale by Anta Sports' controlling shareholder, which could be read as a signal they don't see that nationalism for domestic brands perhaps persisting. What's your read on the industry's fortunes vis-a-vis the geopolitical factors at play?
This is why we love this sector. So the geopolitical factors are not that relevant because these are all strong domestic brands. They have very strong domestic core following. So there's not a lot of risk to the growth scenario. Anta is a case in point. You know, they've been very successful with Fila. Fila now has 2,000 stores across China. It's one of the most successful apparel brands that we've seen in the last few years. And we see a lot of other domestic brands being able to do that, expand into other brand offerings and consolidate their market share.